Hi, thanks for joining me in my market report. My name is Mike, and my market report is on mortgage rates. We like to cover what's impacting mortgage rates on a daily basis, and whether it's economic reports or the sentiment, or perhaps headline news or geopolitical, we kind of give the insight as to what's impacting on any given day, and then kind of also try to look ahead for the week as to what might be the big play for the week on what might affect interest rates. A little bit about myself is I am a loan officer. I do work with the national lender. So if you guys got questions about mortgage rates or about loan programs or different things of that nature, please feel free to reach out. We're here to help. We'd love to earn your business if you guys are looking to refinance or purchase. So again, give us a shout. We'd love to be able to again have the opportunity to assist you with your refinance or purchase needs. Without further ado, we'll just jump right into economic reports for the day. We'll start off with the NHEB Home Builders Index. So this basically gives you gauges the confidence of home builders on a national scale. So the previous one back in August was 75. Forecast was calling for a slight dip to 74. However, it did have a slight uptick to 76, which is good news. Not much movement, but upwards is obviously better than lower. Let's jump ahead to the headline news. Stocks are way down today. The big headline news right now is China's Evergrande HK. They are one of the top three biggest real estate developers, which makes up approximately 24, 28% of China's GDP over there. Not them themselves, the sector of real estate over there makes it, but they are a big player in China's real estate, and that they're is just being kind of compared to like our the Lehman Brothers uh, collapse here in the U.S. So this is kind of looking on the verge that they could be collapsing in China. This has been ongoing for quite some time. What makes the difference today versus in the past is that they got bonds are due. They got quite like tens of millions. So probably over the next 2 weeks, they're going to have to come up with probably just over 100 billion or 100 million in interest payments coming up here, and nobody knows if they can even have it to make the payments. They're going to probably either have to get some restructure the deals, or they're going to have to try to figure out some way to uh, make it work. And right now, nobody knows if meanwhile their stock price or their credit is going down the toilet, and basically nobody knows if the government will be stepping in to assist them or not. Now, pretty much most of their debt is tied to Chinese banks, but the Chinese banks are also tied to the government, so they can absorb those losses. However, it's having quite an effect on the global market, on the equities markets, and of course, people are kind of looking around and not trying to figure out what they're going to do. We're also kind of looking at here in the U.S., the supply chains, inflation. Those are all big factors here, and there are, investors are also kind of looking for where they're going to put their money, as they're looking at for Q3 that those profits may not be looking for corporations may not be looking as rosy due to the higher costs due to inflation to meet those higher wages as well as supply constraints. So again, I think in third quarter may not look as rosy as hoped. So of course, investors are trying to jump ahead. We are at the end of the quarter, so they're going to be looking to rebalance their portfolios. So expect some volatility over the next couple of weeks as we approach the end of the month. Coming ahead here as well. But and then tomorrow we're going to be beginning the Fed meeting, a 2-day meeting. So the FOMC will begin tomorrow, and they'll give their announcement on Wednesday. That will be the big catalyst for this week, as investors are looking for tapering talk, and then they're also going to be looking ahead. They're going to be curious about the dot plot as to when the next rate hike, or when they expect to get any rate hikes, and any other talk they can get in there as to. They also want to see what the projections for inflation, PCE. So those are going to be a couple of factors to watch out for over the next couple of days when the Fed gives their announcements. They want to look at those projections. So we could be facing some volatility over this week here, so be on alert. Let's take a look, see how this is affecting or impacting mortgage rates today. We're up 13 basis points. We're off those lows on Friday. We're down quite a bit. We did scale back a little bit. Today we're up. We were up a little higher, but pulled back. But we're currently up above the 100-day moving average. This puts us in a little bit better position than we were obviously on Friday. So our pricing is a little bit better than what we saw on Friday, which is obviously good news if you're in the market for purchase or refinance and looking at rates. So good, that's good news right there. We'll see if this continues its trend upwards. This could work its way up as this Legrand is making its round through the in-scaring markets as stock markets are reacting to that news. Let's take a see. Treasuries are also down. As you saw, we were way up here, pulled back down just above the 25-day moving average. We're at down to about 1.31 for the day so far. All right, folks. If you guys got questions, please reach out. I'm here to help if we can be of any assistance. But go ahead and reach out. If you guys like these videos, please smash that like button. It certainly helps us out. We greatly appreciate your views. We greatly appreciate you guys. We'll look forward to see you guys in tomorrow's video. Have a great rest of your day. Take care and goodbye.